Hello and welcome to NDTV Profit. You're watching Know Your Company, which is KYC. Today on our radar, we have Paras Defense. I am Hiral Datia and with me is Anushi Vakaria. Anushi, Paras Defense, an interesting company that we are going to talk about as well, because defense has been a sector which has been really in the limelight right now. But let's understand, why are we looking at a Paras Defense in trade today? Firstly, the opportunity size with regards to where government modernization initiatives go, this is one of the reasons why we need to talk to a defense company right now. Secondly, if you talk about the order book, that is very strong with regards to defense companies. So the categoric advantage over here now comes in is if the execution is strong. And secondly, the new orders that could be coming in their pipeline as well. And on number three, the margin profile. How sustainable is the margin profile going to be for a Paras Defense, taking into consideration the trajectory so far and what do the upcoming fiscals look like? So these are the three things that we are looking at, Anushi, so far.
Right, Hiral, just to add to that, it's the export opportunity also, which is quite interesting to look at, considering that we already have this 50,000 crore target in place for FY29 as well. This is what the government view is. And also, currently, if you look at Paras Defense, their contribution right now is less than 10%. So with this new JVs forming, with their focus now in the other areas like drones, anti-drones as well, where that opportunity lies is something also that we should be looking forward. Now, other than that, overall, if you look at the defense companies' outlook, that remains healthier because of what's happening in terms of the government side or in terms of export side. We also need to understand if there are some challenges that still persist over there, what are the kind of improvements that are needed, how could that lead to better execution and visibility for the business as well as we move forward.
Absolutely. I mean, lots to talk about, but let's quickly understand what the company does and what Paras Defense is all about. To start off with, firstly, it offers products and solutions for defense as well as the space segment. Secondly, the company is actually engaged in defense electronics, defense and space optics as well as engineering. And it's the only Indian company which is making infrared optics in large quantities. So this is what the company does so far. But let's quickly also understand the revenue mix of Paras Defense across the two segments that we're talking about. Optics, again, if you talk about optics and optronic systems, around 51% of the revenues come in from there. And if you talk about defense engineering as well, around 49% of the company's revenues come in from defense engineering. So that's with regards to where the revenue mix goes. But I think, Anushi, understanding the key products also becomes absolutely important, because currently when you talk about defense, everyone thinks about missiles, guns, ammunitions, all of that, right? But there is a lot more to that from here on. So let's understand the Paras Defense's, key product mix.
If you talk about the key products that we are looking at for, Paras Defense, it includes something like submarine periscopes. Now, this is an interesting area to look at, considering what's happening with the shipbuilding sector in general. There's like 1 lakh crore of opportunities or so in the next 1 to 1.5 year period itself, with some of these key players in the field involved. So, just for these extra submarines, like 6 or so coming in picture, what could this mean for Paras Defense is something that is interesting to watch out for. Other than that, the company is also involved in areas like hyperspectral cameras for the defense and space side that we are looking at. So aerospace is also one big segment that the company is eyeing on. Electromagnetic protection solutions, border defense systems are also some of the other areas that we are seeing. Now, where does these, products are involved in? If you are looking at, it's involved in areas like rockets and missiles, space and space research as well. Along with that, we are looking at their applications in naval systems as well, as we've already outlined about the submarine periscopes as well. And there's also land and armored vehicles. So it's across Navy, Army that we are seeing this picture playing out for the business as well. Other than that, electronic warfare and surveillance related is also another area that the company is targeting on. But other than that, if you are looking at their subsidiaries also, now the company's focus is also increasing towards the drone side of the business and even the anti-drone systems side. In fact, the company is also eyeing a #1 position here in the next, medium-term outlook, if you are outlining that. And electro-optical and infrared for avionic platforms is something also that the company's business is involved in. So here, that's the perspective that we are looking at. And considering all of these scenarios that we are seeing, the order book The order book is also healthier if you are seeing just the latest FY25 data.
Absolutely. You're talking of an order book which stands at nearly around 928 odd crores. And this is what Anushi is alluding to if you talk about FY25. And that implies to a book to bill of almost around 2.5 times. In fact, the last 2 years, their book to bill has remained steady at around 2.5 times, though the order book has jumped substantially from a 630 odd crores. It's moved up to almost 928 odd crores. In the previous 2 years, it's remained in that range of almost 300 to 392 odd crores if you have to look at FY22 and FY23. Now, if you talk about the order book position, the key contributors to this order book of around 928 odd crores comes in from periscopes, which is almost at around 120 odd crores. Your control systems contributes around 300 odd crores. Your tank electronics is around 100 odd crores, and your laser systems is almost 120 odd crores. Now, just to be noted that the order book is largely domestic. International orders is less than 10% in terms of the overall order book. So the opportunity that Paras Defence probably could be sitting on as well in terms of the international business, this is something that we need to check with the management as well. So that's with regards to where the order book goes.
Right. So that is in terms of order book picture that we are looking at. But you know, with this kind of orders that we are seeing in place, the company is also eyeing a #1 position in several of these parameters that we are looking at. It pertains to optical systems as well. Just note a couple of months back, we had outlined that the company has heavy investments in place as well for these optical system over here. So laser-based air defense is another area that we should be watching out for. Anti-drones is one area that the company is also expanding in. It also, the other players also includes the likes of Ida Forge also in this particular space that we are looking at. Electromagnetics is also something that we should be watching out for. So it's the overall order book picture that we should be seeing going forward, considering that, you know, it's high order inflows is something that can be expected over FY26, FY27 period for the business. So Hiral, you know, that's the overall outlook that we are seeing on a Paras Defence.
Absolutely. Now with this, let's understand what are the rating parameters that one should be watching out for on a Know Your Company. So let's understand what are the rating parameters that we will be considering from here on. Firstly, we'll do an income statement check. Balance sheet is the next one. Return ratios, which is very important for your investors. Shareholding, which is interesting because your FIs and DIIs come at play. Street credentials, street coverage, and the valuation picture and outlook. So that is what we will be talking about in the next 15 to 20 minutes. But let's also understand from the income statement. Now, if you talk about the income statement of Paras Defence, what they've said is, what's interesting is that the company actually aims to achieve 40% revenue growth in FY26. That's the number that they're quoting. Now, if you have to talk about the revenue and the 3-year CAGR as well, that's the compounded growth. From a 254 odd crores in FY24, it actually did see a good growth, came up to around 365 odd crores, and they're looking at a CAGR of around 26%. Likewise, if you see in terms of where the EBITDA is concerned as well, from a 51.1 crore, it's actually jumped to 97 crores, which is nearly doubled in terms of the EBITDA in the last 2 years. And in terms of profitability as well, it has actually doubled. So the CAGR growth, if you have to see on these 3 parameters, it's ranged between 23% to 31% respectively. So that is something that we need to note. And on the back of which we've given it a thumbs up so far.
Okay, in terms of just seeing the Q1 performance also, now they've recorded about a 12% of a growth in this quarter itself. Margin trajectory is something that we should be seeing, considering that the company is eyeing for about a stable profitability margins going forward. Current mix stood at about 24%, net profit remaining flat in this quarter. But if you talk about balance sheet, you know, what's interesting is the company's borrowings. Now, if you look at just what has happened from FY24 to 25, we've seen a significant downtick in terms of where the borrowing number is concerned. While for cash in bank, we are seeing a reverse scenario playing out where 11 crore has now increased to the likes of 111 crore. If you talk about the overall book value, now that has increased consistently from FY23 to 25 picture. This is from a 413 crore figure to 640 crore that we are seeing by the end of financial year FY25 is what we are seeing. So overall, given these parameters, we've given a thumbs up for balance sheet as well. Do note that the company had also raised about 135 crore of funds via QIP last year. So, you know, some bit of impact playing in the FY25 numbers as well on this.
Right, so a thumbs up coming in on the balance sheet, but let's look at the next aspect that we're talking about is with regards to where the cash flow goes. Now, in terms of the cash flow, it's a pretty neutral way to look at the cash flow over here because it's inconsistent so far. If you see the net cash flows, after generating around 15 odd crores in FY23, it actually became negative in terms of FY24 and again bounced back. So it nearly doubled from your FY23 number to nearly 31 odd crores in FY25 as well. Now, taking that aspect into consideration, what becomes key from here on is to monitor the future cash flows as well of the company. So that is going to be, that is one of the reasons why we've given it a neutral rating so far.
Okay, and coming to the return ratios, if you are looking at, it is an improvement that we are seeing across both the metrics, that's ROC numbers as well as return on equity numbers, from 9% to 11.7% is the kind of an uptick that we've seen in ROC, while for ROE that number has increased from 12% to 13%. Now, the management does expect further improvement in terms of where these return numbers are concerned. It would be interesting to see, if we could see the 14 to 15% range coming into effect in the next, in FY26 itself, or would this be a scenario that we'll see in FY27 or 28 playing out? So overall, given this, we have given this metric a neutral rating, right?
And what's interesting is, the significant drop that did come in terms of FY24 as well. That was probably on the back of the profitability decline that we saw, number one. And secondly, that sharp rebound that has come in terms of FY25 probably shows the company's ability as well when you talk about that rebound and that effective deployment when it comes to capital for higher returns, right? So that trajectory from here on, as Anushi has been mentioning, is something that we should be monitoring. But let's also look at, what the shareholding pattern looks like from here on. If you talk about the positive aspect first, FIs who really had negligible position when you talk about March 2024, since then, they've actually increased their stake to 6.9%. So that tells you how the FIs are positive on in terms of the India's defense story. But what is not really interesting is the way DIIs and the public shareholding has been going down. From a 2.8%, it's actually gone down to 1.9%. So nearly your public shareholding has also inched lower on this aspect. So that's the reason why we're giving it a slightly neutral rating. But your FIs are betting big on India's defense story, Anushi.
Right. In terms of, that's in terms of the shareholding pattern that we are seeing. But also, let's look at street cred and coverage. Now, if you are seeing in this 1 month period itself, it's 2% of returns that we are seeing, while 6 months we are seeing at better returns of around 55%. But more or less in this 1 year, the stock has remained muted. It's like a 3 to 4% of an upside that we are seeing for the shareholders. Of course, there was adjustment in terms of the stock price as well. And if you look at the data since October 21, since the time it is there, we are looking at about 163% of a return so far. So it's neutral considering, what's playing out, in terms of how the defense companies are doing. There has been significant correction for some of these counters recently. So, we are seeing some bit of impact playing out for Paris Defense here. And in terms of, analyst recommendation also, we're not seeing that much of street coverage for this particular stock, just with about a 1 buy holding. So your hold and sell is negligible. So we'll not consider that as a parameter. It's mainly basis on the stock performance that we've given this rating, right?
Absolutely. It's mainly on the stock performance. And moving on, with this, I think what again becomes important is considering the valuations over here. Now, if you talk about Paras Defense, you can see the screens. If you have to compare it to peers as well, it is the most expensive defense company, trading at 81.7 times versus your Zen Technologies, DCX, as well as the Astra Micro. But if you have to compare a Paras Defense even to its 2-year average, it is still the most expensive because your 2-year average PE is at around 67.6 times as well. So yes, valuations are expensive, and that is the reason why a neutral rating on this one.
Right, just on that part, we are looking at higher multiples for Paras Defense. It's the outlook we should be considering, whether the outlook justifies these high multiples that we are seeing. So in terms of where the revenue growth picture is concerned, we are looking at about a 40% of projection in terms of increase over here. And this is with the company maintaining their margins as in comparison with FY25 that we are looking forward. So it's order inflows also which are interesting to see, considering that we have about a 928 crore of a order book positioning so far. So what are the kind of inflows that we'll see in the next 2 to 3 years, and in which segments particularly, and with what kind of margin profiles is something that should be interesting to watch out for, just in terms of high value opportunities that the business has given. So for laser system, for just FY26, if we do overall picture, then we are looking at 1,000 crore of an opportunity from this particular segment, which is something that we are seeing for optical telescope as well. In existing business that the company currently operates in, 400 crore is the size that we are seeing. But what is interesting is in the next 5 years, this optical system, a substantial kind of a pickup that we are seeing in terms of your 6,000 crore is the market opportunity that we are seeing. How the company, would be able to benefit from such a number is something that we should be watching out for, Hiral.
Right. So I think opportunity in 5 years becomes absolutely crucial. But let's quickly revisit all the ratings basis the analysis that NDTV Profit has done on KYC. If you talk about income statement, balance sheet, both are a thumbs up. Your cash flow and return ratios is a neutral. If you see the next set, shareholding a thumbs up, and your street credentials and coverage, valuations and outlook forward is a neutral. And basis this rating overall, it's a 5.5 on a 8. For Paras Defense. But let's also get in Amit Mahajan, Director at Paras Defense and Space Technologies, to join us. Welcome to the show, Amit, and a pleasure to speak to you as always on NDTV Profit. I'm sure you would be probably happy with the rating that NDTV Profit has given Paras Defense so far. My first question coming to you is to actually justify the valuations and the way the stock has moved. With that, if I have to tie your FY26 guidance of 40% growth, margins to be stable at 27%, want to understand, does it add up well? Do you think probably you could achieve something better than what you've guided for to justify the valuations?
Firstly, good morning, and it's always a pleasure to be on NDTV, and it's always a pleasure to talk to you guys. I also want to take a minute and thank you guys for this rating and a very detailed analysis of Paras Defense. At Paras Defense, we are not very savvy when it comes to all these valuations and all these figures, because for us, it is business as usual. Now, linking that with justifying the valuation, we don't know how to do it, because we are looking at business. We are focused on our business. We are focused on making sure that we get more and more orders. We execute those orders, one, primarily for the business aspect of it, and second, for the national security aspect of it. In this, we, because of our strategy, which has been there since the inception, is always do profitable business, because you want to sustain and grow. So this is our focus at all times. How the market plays out this strategy, this is something which we can't control, neither do we work for it.
So Amit, point taken, absolutely point taken. So, you mentioned about being sustainable, right? Now, a 40% growth when you talk about FY26 probably could be a one-off, I don't know. What is that sustainable range of growth that you see for the next 2 to 3 years then, from a top line and a margin perspective? Because that actually gives a realistic picture then to the investors.
I would like to generalize this, just not just for Paras Defense, but I'm telling you, all the old players in the defense manufacturing space. Now, these are the companies that the Ministry of Defense would like to work with, because the national security and the demand that comes out of the defense sector is so huge that it needs to justify and it needs to get delivered in time or before time. So these are the players who will always be in business. They will always be trusted for more and more business. There are certain technology segments like optronic systems, if I may call, or the high power laser systems and the various other defense electronics and electromagnetic pulse. All of these areas where Paras Defense have carved themselves a niche, these are the areas which will keep growing. If I may call it, the guidance would remain for the next 3 to 4 years, if not more. So I can tell you for sure that the growth will be linear to be more conservative. It can grow higher than linear, but I just want to be a little more conservative with this.
Hi Amit, this is Anushi joining in as well. Just, in terms of the growth visibility that you've given, want to understand order book as well. Now, currently we have about a 928 crore of an order book position that you have. Just want to understand in terms of inflows, how would that shape up? What's the kind of execution picture that you have in mind? And which are the particular segments that would lead to this kind of an uptick in terms of where the order inflows are concerned?
Anushri, you beautifully covered this part already in your presentation that we are expecting an order book in excess of 1,000 crores in the next few months. This is coming out of the funnel, the huge funnel of more than 2,000 crores that we have. And when we say funnel, our probability of winning those orders is very, very high. And these orders will largely come from optical systems, the telescopes and the space programs and the electronic systems. All of these put together, the submarine periscope that we are expecting orders from. So these are all areas around optronic systems and defense electronics.
Amit, just on that, submarines is one interesting area that we are watching out for. There have been recent articles also about 6 more submarines coming in picture, about 1 lakh crore of an opportunity from just that itself. So considering that shipbuilding companies are already in this picture that we are looking at, how does Paris Defense benefit from this? What's the kind of competition that you have from this particular area and the order opportunity size?
So I would want to be very frank here that we are humbled to have maybe developed a very, very critical technology for submarine, that is the submarine periscope. Now, when we are doing this, we are very, very fortunate that we are amongst the only company in the whole subcontinent to have delivered something like this. The results and the performance, the functionality is coming out really, really positive. Paras is not stopping here. Paras is adding more and more value to this product itself. And moving forward, this is something which is the most critical product that we are delivering to the submarine platform. Apart from this, there is a lot of other subsystems that we deliver through defense PSUs for the submarine platform. So all of it put together, we are delivering substantial value when it comes to submarine as a project. Moving ahead, the orders that are expected only on periscopes are very, very promising. We have a long-term visibility when it comes to business related to that. The competition currently will be from foreign players. And as far as the technology is concerned, we are very well in control of that technology. We've developed something which is acceptable or rather better than what we can import otherwise to the customer. He is extremely happy with our product. And we would like to continue to maintain this happiness. We would like to do concurrent engineering to make sure that we are always ahead of the technology curve when it comes to submarine periscopes, not just for domestic market, but also we would like to export that in the coming future.
So, Amit, with everything said and done, I think the question comes down to what is the kind of profitability that the company is delivering, what's the sustenance in terms of margins, and in turn, what the return ratios look like. Now, the recent fluctuations that we've seen in the profit margins as well, that has been one of the concerns that investors talk about. There have been various reasons for that. So, firstly, what are you doing, one, to improve the margins, in terms of FY 26-27 as well? Because what we saw in FY 25, do you think we'll be able to replicate going ahead? Secondly, the product mix that you're working on, will that have an impact on your future profitability as well? And in turn, your return ratios?
Yeah, so I think it's linked to one particular factor, which I would like to summarize my past and also the future. You have to look at Paras Defense as a company making a transition from a tier 3, tier 2 to today tier 1 company. From a component manufacturer to a subsystem manufacturer to a today system manufacturer. The company has made a paradigm shift. This has had a positive impact on not just on the revenues, but also on the profitability, on the cash flows, on the ROC and ROE. Moving forward, our dependency on capital expenditure is going to go low, and our revenues are going to be scalable without much deployment of capital, which means our ROC levels are going to be better. Now, when I'm saying this, whatever we are doing today, we are moving up the value chain. We are investing into our manpower. We are having onboarding one of the best brains in the business when it comes to those technology sectors. And with this, we will be not only be able to sustain the profitability, but we'll be able to improve the profitability as we go forward. Our revenues currently are only standalone. Now, our subsidiaries chip in to give us the necessary scalability on the revenue side, also on the profitability side. So, when we are looking at the picture on a long term basis, this particular growth is not just sustainable, this is very conservative, if I may call it.
So just on that, Amit, you spoke about low capex requirements along with that improvement in return profiles, but it's the export picture also that I want to understand. Currently, it's about, lower than 10% or odd. So just want to understand where the current number is, and in the next 1 to 2 years period, where do you see this export contribution going forward to?
See, I've always maintained that export for Paras has always been a plan B. I'm not saying we don't want to export, but the domestic market today is so promising, and hardcore defense and space manufacturer like Paras Defense today sees their domestic customer as the number one customer. When I'm looking at export, I'm welcoming all export opportunities that are coming our way. That gives us the necessary scalability, but the highest profitability, the highest probability of winning the business comes from the domestic market.
Okay, so domestic is still going to be a major focus area for Paras. But thank you, Amit, so much for joining us on the show. We're completely running out of time. So that's the management of Paras Defense. A 5.5 rating on an 8 is what NDTV Profit has given the company on KYC. Thank you from Manushi, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit, and you can watch the entire episode if you've missed it on our YouTube channel as well.